Out what Deven Choksey's views are on the markets as well as where his outlook is on individual stocks. Thanks so much, Deven, for joining in. Let's start off by getting in your take then on the PSUs. Given that we have seen a bit of a rebound from the lows yesterday, of course, this sector was at the forefront. Do you think that we're likely to see some sort of a synchronized rebound, or it's going to be very stock specific?
Good morning, Haven. Well, I believe that I think most of the PSU companies have given a significant amount of price correction. So certainly, I think it was across the board. I think in many of the cases where you saw the fall, be it in the capital goods segment, be it in the metal commodity space, be it in the engineering space, or for that matter, uh, uh, any other I think areas in which I think the shipbuilding, defense, etc. I guess I think each and every one of them have given significant price correction. So certainly there is a case for some amount of bounce back from the technical point of view itself, if I have to put it across. Still, at this point of time, while we are talking, given the kind of last quarter's commentary which has come from most of these companies, I think their growth average, I think is not going to be more than 15 to 20% on a year-over-year basis. So certainly the valuation at which some of these companies are quoting, they might have to undergo some amount of price correction. That is what I would believe. So yes, I think there will not be, I think, one way down the street, but at the same time, I think you will have to find, I think, some amount of support, some amount of recovery in the price from where it fell, and thereafter, I think you might see some moderation of the correction. May not be, I think, price correction, but the time correction in the some of the PSU stocks. So yes, certainly one would like to buy, but I think at a corrected price with the time correction along with.
Devin, how do you see rest of the year moving? We still have about a quarter left. Are we in for this last hurrah, another 5-7% move on the Nifty before the year ends? I mean, Stanley Druckenmiller says like this that when a year is good, you push metal to the pedal for the last phase.
Yeah, Nikunj, good morning. Well, I believe that I think currently the major amount of trust is because of the liquidity which is now coming in. The India-specific liquidity remains absolutely strong and convincing, and that gives the promise that whatever the new paper which comes into the market, based on the merits, these papers will get absorbed in the market. So on one side, I think this liquidity is going to chase some of the quality papers which are the new IPOs or the FPOs or QIPs of the world. On the other side, the index fund, the traded funds coming in from the global space because of the rate cut, allocation of money increasing to India, better visibility, all these just put together, I believe that I think these funds are likely to continue for some time the allocation of money, and that's where the liquidity driven push will come. Fortunately, in the frontline stocks, the large cap companies, with the kind of growth that they are having and the valuation that they're currently enjoying, I don't think that many companies have become very expensive. So to an extent, I think this journey is likely to continue. But I would remain cautious. I would remain, I think, selective. And on merit basis, we will buy new additions into the portfolio. Otherwise, continue to hold the existing stuff in the portfolio wherever we see the earning opportunity continue.
You've also got a fresh brokerage note on Paytm. MK has actually upgraded the stock to an ad rating from reduced. They've hiked the target price as well to 750 rupees from an earlier 375, saying that now the regulatory drag is easing a bit. They are optimizing OPEX and are going to restore profitability. And the management is also talking about how the loan business, distribution business is gradually going to reaccelerate. So those are some of the key triggers, and that's why they expect Paytm to turn operating EBITDA positive by Q4 FY25. Devin, curious to get in your take whether or not you've tracked Paytm and what your outlook is on the future projections looking rather promising.
So my understanding is they are continuously trying to change the business model. I think from where they were up till now entered, whatever they have up till now entered into, systematically they have started withdrawing themselves, or to a greater extent, I think started pushing more amount of trust in the area of like loan distribution product that you are talking about. I believe that I think they're evolving still. And at this point of time, I think difficult to predict whether I think they would be in a position to make profits out of this particular business that they are talking about. Even if they do so, I think in my understanding, the current valuations are not cheap. Yes, I think the market may probably start finding fancy with the smallest of profit that they may make, but the valuation remains, I think, pretty expensive. So given a choice, I would probably put my money where I think the growth is more certain and sustainable.
Fair point. Cheap and good in the NBFC space. Interest rates will come down, wholesale borrowing costs will come down. That automatically will have an impact on how NBFCs would lend and they would borrow. More importantly, at the rate at which they would borrow. What is good and cheap in the NBFC space?
Well, I'm afraid, Nikunj, I think the quality companies are not available cheap, and those who are expensive, I think they are definitely having a better valuations to talk about. For example, I think most of these companies, and I think I would like to take an example of say Bajaj Group, Bajaj Finance, Bajaj Housing Finance, where they are getting the advantage of higher valuation. They are systematically taking that particular advantage into their fold. At higher valuation, they dilute, they bring new money into the system, and in turn, I think they would probably have lower equity component to service, larger amount of, I think, premium sits into the books, on which they probably end up getting more amount of leverage also. And in turn, finally, if you see the outcome in the balance sheet is they are getting the NIM, which is far more superior compared to most of the other players. So this model has been working very successfully, be it in case of Bajaj, even Chola for that matter, I think working in that direction. Poonawalla is working in that direction. So I'm certain about it that capital market valuations are giving systematic advantage to some of these companies. And these companies are smart enough in taking those advantages into their fold, generating higher amount of NIM and adding better amount of ROA into the books. So we like backing these NBFC companies, so they are at a premium valuation. Continue to hold them in the portfolio.
The other point, Deven, is that it's almost it's official and it is evident and it's a trend that auto companies are now happy to give discounts. Waiting periods are over. You walk into a showroom, you get a car and you get accessories free along with a discount. But that is not having impact on auto demand per se. Even though the autos cars are not growing, discounts are back. Auto stocks are still holding on. Why is that?
Well, I guess I think one point here is that I think it may not be a permanent thing that the discount is continuing. Today, in these particular times, I think we are seeing the discount for a variety of reasons. The consumer is waiting for the interest to come down. That is one of the reasons, I think, as I would like to call it as. If the cost of funding comes down, my guess is that I think the demand is already there in the system. Maybe I think you're going to see a surge into this business. Second most important aspect, waiting for the new generation of vehicle to come and hit the road. 2025 starts with Maruti coming up with the electric vehicle launch. And majority of the large segment of customers, the mass segment of the customers, they would prefer to buy into the electric vehicles going forward. So that is one of the reasons for which I think we are seeing this particular situation. Of course, Tata's electric vehicle also, I think, is facing relative about the situation because in the temporary period currently, the hybrids are getting the registration discounts in the states like Uttar Pradesh. So I think these are some of the factors which are basically affecting the electric vehicle demand. But I don't think that I think it's a permanent loss. I don't think that I think you are going to see the permanent downside in the demand for the cars. I would think that somewhere down the line, once the crop season starts yielding the revenue in the hands of the rural masses, probably you will see the demand returning back for passenger vehicles. Fortunately, the good demand continues for the two-wheelers, and I think including the electric vehicles in the two-wheelers. And fortunately, I think commercial vehicle segment remains absolutely strong and upbeat. So we remain distinctly positive about the two-wheelers in the commercial vehicle, while we believe that I think passenger vehicle would have the reason to recover going forward after these challenges are over.
Time, our sources are telling us that NTPC Green IPO is likely to be filed in the first week of Diwali, that's come November, and they're going to be initiating road shows from next week in Mumbai, Singapore, London, as well as US. Deven, just wanted your thoughts on the entire energy transition play. And, I think Worry as well, as of last evening, got the go-ahead for its IPO. Where is it that you're finding value in such a large theme? Because, this is almost like PSU of last year.
Yeah, absolutely. I think, but good part about this particular journey is that we are seeing some good quality names coming out in the public market. And though I agree on one aspect that most of these companies will have a very long road before which I think they start talking about giving some big value to the investors. including NTPC Green. But I believe that it's a journey worth traveling. It's basically next 5 to 10 years kind of a journey in which many of these companies are likely to see a significantly large amount of trust. For example, in the green hydrogen space, I think the demand generation is going to come from the refinery space, the metal space, the engineering space, who are the bulk users of the power. There, the generation of demand is going to be significant. And over there, whoever is, I think, basically following the captive route, they are likely to see the cost of energy coming to them at around 3 rupees to 4 rupees per unit, eventually in next 3 to 5 years. So from that perspective, I think today, whatever the energy cost that you are paying, either one third or one fourth price at which you are going to get this energy, which is going to be a game changer for the user industry. So I think on one side, we are certain about it that capital intensive businesses like green hydrogen will survive and grow. On the other side, we believe that the larger beneficiaries would be the consumers of this industry, that is the power users, who are basically in the refinery or the fertilizer or the metal commodity or the cement commodity space. Those kind of players are likely to be the larger beneficiaries going forward. And whoever is having the captive use of this power, they are going to be undoubtedly going to be talking significantly large amount of balance sheets going forward as a user. So we like to see how exactly the success comes out of Adani Group, how exactly the success comes out of Reliance Group in this kind of activity. Remain fairly confident that this is a space where you will have to be investing and probably make good money in next 5 to 10 years.
Any thoughts on Paytm? Are you looking at this story or re-looking at the story at all, or completely shunned it off?
It's not completely shut it out, but I think we believe that till the time I think they start showing the profit on any of the product lines that they have talked about, I would think that I think we will not be in a hurry to buy it. Also because of the fact that I think the valuation at which the company is quoting, even if they get into the slightest of the profit, I think it's not going to be big yet nature at all. So unless I think they show a sustainable path for making profit through the products like loan distribution that they are talking about, I would think that I think we would like to wait for some more time. In the meantime, you are getting plenty of other opportunities who are basically giving sustainable output on the business side. So that's where probably I think our approach would be. We continue to focus on quality franchises more than hopes and expectations on KPM.
Okay, thanks, Deven, for joining in. It's been good chatting with you and getting your take on the markets. Let's take a look.
If you like this video, then like, share and subscribe to ET Now.